Hello and welcome to the June 2023 Capstone Fund 5 video newsletter. Remember, this is for the May collections period, April accrual period. Now, we had a 9.6% return for all your investors this month. That's really great, especially considering we had $2 million in cash in the bank undeployed back in April on the accrual period. Now, we funded 11 loans. We got all that money deployed this last month. So we're looking really good in terms of funds being at work that are in Fund 5, getting all your investment dollars, working out there, earning dollars for you to increase your returns again. So we're really happy about that. Remember, national news, we've been talking about the housing shortage over the last 6 to 12 months. Well, I want to go back to the year 2000. From 2000 to 2010, there were 15 million homes built, 15 million housing units going into the market. However, there were only about 11 million new households. So the supply far outpaced demand in that decade. Now we shift up to 2010 to 2020. There were 8.8 million new homes built, so 8.8 million new housing units in the market. But there were 11 million new households in the market. So there's actually a drawdown of 2 million homes or housing units in the national real estate market. So over the last decade and the last 3 years, we're still in macroeconomic trends of shortage of supply in the housing market. This is why we're not too worried about prices declining, even though interest rates have been going up over the last year. Now, of course, a couple days ago, the Fed made no raise on the Fed funds rate for the first time in like 12 months running. So that was great news as well. So that's really important to remember decade by decade how housing supply and demand is going in the trends there and paying attention to that in terms of our underwriting, what markets we're going into, and looking at those trends overall as it's related to the Fund 5 performance. In regards to the Fed not raising rates a couple of days ago, that's great news. Inflation started to slow down. Raising rates has been working, of course. So what this looks like for the housing market over the next year is flattening of mortgage rates in new purchase loans and refinances. Now, of course, there'll be some fluctuation up and down, month to month, week to week. But overall, we're likely to stay about where we're at. In fact, a poll of the current Federal Reserve board members shows that they expect rates to kind of top out at 5.5, the Fed rate, around 5.5, and then over the next couple years, drifting back down to about 3%. So we'll see as the housing supply starts to balance over the next few years and interest rates drifting back down a little bit. We're just going to have to keep an eye on the housing market and see how those things play out. So be very interesting to watch over the next couple of years, something we're always keeping an eye on. Now remember, we're about $19.1 million in Fund 5. Everything is deployed. We're trying to push up to $20 million of total investment in the Fund 5 here in the next month. So if you have friends and family, yourself, it's a great time to put new money into Fund 5 as we can get deployed. Really quickly. We have a big loan funnel. We're looking really good here at Capstone. Love the performance, love the returns, love talking to you guys every month, love sending you guys checks every month. So give us a call if you have more money to put in or know anybody that you might want to refer. We'd love to talk to them, have coffee, sit down, chit chat. Have a great day, have a great week, and we'll talk to you next month.